So in this video, I want to discuss my entry in Kaynes technology. Okay. I bought the stock on 26th of November. And as I record this video, today is 11th of December. The market is live right now. And nice candle I see 2.10% up. Very good. Looks encouraging. So I bought it on this day. So let us discuss why I bought this stock. As you can see, it nicely is touching that blue line and continues to go up. So that blue line, the 50-day simple moving average, continues to act as a support for this stock. And we'll see why that is so. Why would a stock continue to go up for a long period of time? See, unless the fundamentals are not there, the stock is not likely to go up. And you can see the numbers, the fundamental numbers on the screen, which I have written here, which show why the stock has been going up. But let's come back. Okay, let's do our regular analysis. What do? I do comparative analysis, technical analysis, fundamental analysis. Let's do comparative analysis. Price strength is 90, which is beyond excellent. I want this number to be more than 80. Buyer rating is A, which is beyond excellent. I want this number to be A or B. Industry rank is 9, which is beyond excellent. Okay. I want this number to be less than 40, preferably less than 20. This is in the top 10 industry groups. Industry strength is improving, means probably this number was higher than 9 6 months ago. Now it has become 9. So the rank has improved. The industry strength has improved. So comparatively, this stock looks very strong. What about technicals? Well, technically, there is a blue dot on the chart. Blue dot means 52-week high of the relative strength line. Let me show you the market Smith. So let's go to Kaynes technology. So if you see a blue dot inside the base, that's a very positive sign, because the blue dot represents, see, there is a blue dot all inside the base, okay, all throughout. Blue dot represents the 52-week high of the relative strength line, and the relative strength line indicates the strength of the stock relative to the Nifty. So if that line is sloping up, which means the stock is doing better than Nifty in terms of performance on a day-to-day basis. Okay, so it continues to make 52-week highs. That is why I got interested in the stock. Okay, now I bought it on this day. So let me first hide the subsequent candles. Yeah. Let's look at the technicals. Now, as you can see, I have violated some of my rules to get an entry into this stock, because if you look at the base, yes, on this day, sorry, let me redraw let me hide this. Yes, this is what I saw before buying the stock. Okay. Now, if you notice, the price is above the blue line, the blue is above the green is above the red. So 50-day moving average, 150-day moving average, and 200-day moving average. The price is above all the moving averages, and the moving averages are all sloping up. Okay. So this stock is in a nice stage 2 uptrend. Okay, that is confirmed. So the uptrend is confirmed. Then this is the highest point in the base. Then you start counting from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There are 10 candles in the base. Fantastic. Okay, 10 candles in the base. So we need blue, green, red, 10 candles and minimum 4 points. But if you notice, the high of this candle is 5980. The high of this candle is 5995. So there are only 3 points in the base. 1, 2, 3. So ideally, I should be waiting for point number 4 and then use 3 as my buy point. But I did not wait for point number 4 to complete. I directly put the yellow line at point number 1. Okay, I decided to buy the stock at point number 1 without waiting for point number 4 to complete. This is a direct violation of my rule. Now, why would I violate my own rule? This is very important for you to study. So point number 4 is not complete. That indicates one technical weakness. Okay. But if you see the base stage, it's early stage. So see, you see this green line, green dotted line. If I click here, it is called pattern ascending base stage number 2. So it is base number 2. It is not actually stage 2. MarketSmith should actually change that. Okay, it is base number 2 within the stage 2 uptrend. Okay, that's the correct way to represent the number. So I am buying the stock as it is coming out of base number 2. So I am buying it early. Within the stage 2 uptrend, there is early stage, middle stage, late stage. So I am buying the stock as it is coming out of the early and going into the middle stage within the stage 2 uptrend. So I am buying it early. Okay. And there is a blue dot. So these are technically very strong signs. Okay. So even if I violate my rule, that is still acceptable because there are other factors, other technical and comparative factors which compensate for the absence of point number 4. Okay. So let me repeat that. There is technical strength, fundamental strength, and comparative strength compensates for the absence of point number 4. So I can take some risk in this stock and for additional compensation of risk. Okay, I think I bought half position in this stock. I don't remember. I have to check what is the position compared to the overall portfolio. But this was bought in 26th of November, so that is why my brain is forgetting. But I think I have a half position in this, or maybe even if I bought a full position, I must have sold a half. Okay, as the stock made a squat on the breakout day. Okay, so comparatively strong, technically strong, one rule violated, that is okay. There is forgiveness for that. Okay. Then EPS growth, latest quarter 70%, sales growth, latest quarter almost 60%. You don't see accelerated EPS growth in the last 3 quarters. You don't see accelerated sales growth in the last 3 quarters. But if you look at the latest quarter numbers, they are very impressive. They belong to the leadership category. These numbers are a characteristic of a leading stock. Okay. EPS should be minimum 40% latest quarter, sales should be minimum 25% latest quarter. When ROE is less than 17%, you have to look at margins. Preferably, the margin should be at an all-time high. So if you look at margins, click on consolidated. Okay, come down. There is margin here. You see from 2014 to 2024, the margin is at an all-time high. Okay. Then if you look at annual EPS 9, 19, 30. If you look at the past 5 years from 2019 to 2024, at least in the past 5 years, the EPS is at an all-time high, at least the past 5 years. So I would call it 5-year high. The EPS was all-time high came into 2018, then it dropped and then it started to improve again. So I would say the EPS is at a 5-year high. The margin is at an all-time high. These are very positive signs fundamentally. Okay. Moreover, the latest 3 years, there should be some positive growth in the EPS. And as you can see, there is 50% growth in the latest annual EPS growth. Okay. 50% growth. And generally, the leading stocks, the average EPS growth was 36%, according to William O'Neill's book, How to Make Money in Stocks. So 100 years of stock market data tells you that the latest annual EPS growth should be 36%. Okay. Latest 3 years average annual growth rate should be 36%. Here you see 50% growth, which is a characteristic of a leading stock. Okay. So this stock is showing leading characteristics in majority of these points that I have mentioned here. Okay. Industry leadership position. So if you go here, you click here, you click on stocks. You see within the top 3, you have Kaynes Technology. Okay. So this stock is in the top 3 stocks within the industry group as per market capitalization, which is what I look for. So it is in the top 3. So that is why I have written Industry leader 2. Annual EPS is 10, 20, 31. Positive growth in annual EPS. Remember, when you look at annual EPS, the percentage rate of growth does not matter as long as there is some positive EPS growth. The percentage rate of growth matters only in quarterly numbers, not in annual numbers. Okay. Market conditions, well, it's in a rally attempt. Check this tool. Okay, this link, it's in a rally attempt, which means what? That will affect our position size. So I think I took a 6.25% position size. So the first yellow line is my buy point, which is point number one. The second yellow line is 1% above the first yellow line. That's the buying range. I ended up buying the stock just above the buying range, which is not good from a trade execution point of view. That green line 6108.40 is above the buying range, okay, which is not acceptable. So I have to buy the stock within the buying range, not above the buying range. So I have bought the stock slightly extended, but I forgive myself for doing that because it's not too extended. Okay. So the green line represents my average execution price in the stock. So that's my buying price. So the stock squatted. There is volume confirmation because it closed above the blue line, but there is no price confirmation. So I think I booked a loss on this stock by selling half position. Okay. And I continued to hold on to the remaining half position because it was still above my 8% stop loss. This red line represents my 8% stop loss. 8% below this green line, below my average execution price. Okay. Then look what happened. The next 2-3 days, my patience got tested. So when this candle closed, I put my mental stop loss, which is the blue line at the low of this candle. I said to myself, if the price closes below the blue line, I will start to reduce my position size. Okay. So the blue line is for me to manage the trade. If you look at my videos in this week from Tuesday, Wednesday, Thursday, I have done an extensive discussion of these colored lines on the chart. So I want you to refer to those videos, watch those videos 2-3 times. So again, why did I buy the stock? Comparative strength, technical strength, fundamental strength. One rule I have violated, the 4 point rule in my stock execution. Another rule that I have violated is that uh, I think I bought the stock. Yeah, one rule was violated. I bought the stock at point number one, which I am not supposed to do. Okay. That is the only thing I have violated, nothing else. Everything else looks okay here. Okay. Trade execution, one rule was violated, by the way. The stock was bought above the buying range. But that's okay. I mean, it's not too far away. You can't even see that on the chart. Then look what happens. My patience was tested in these 3 days because the price continues to be below the yellow line. And then, people who have patience, their patience ultimately pays off like this. Okay. Then look what happens. And I have more patience. Okay. Here, my patience got tested. And you see what is that? This is today's candle. Look what is happening. It is taking out this high. I think this is the all-time high in the stock. Okay. So the stock is doing very well. I have not sold the remaining 50% of my position. Okay. And that is my analysis of the stock. That is the reason why I made this video, to help you understand what I'm looking for and how I'm managing the trade. If the stock continues to go up, like if it shoots up like 10%, probably I will move my stop loss to break even. Okay. Let's see what happens. It's going up on low volume. See, that is not a good sign. The stock should go up on high volume always. Okay. So comparative strength, technical strength, fundamental strength, couple of rules violated, market leadership position, good annual EPS numbers. Okay. Decent trade entry, not great trade entry, very good stock selection, decent trade entry, decent trade management. These are the three things that I judge myself on. Okay. So I hope this video has added value to your trading journey. Thank you so much for your time and support on this channel. Have a fantastic day today. Okay.